Hi, my name is Dara from FB, and today I'm going to be talking about the latest decision by MAS to grant the digital banking licenses. So number one, what does this decision entails? The digital bank licenses will allow entities, including non-bank players, to conduct digital banking businesses in Singapore. This new digital bank license will mark the new chapter in Singapore's banking journey and ensure that Singapore's banking sector will continue to remain resilient, competitive, and vibrant. It will issue up to 2 digital full bank licenses and 3 digital wholesale bank licenses. A digital full bank license will be allowed to take deposits from and provide services to retail and non-retail customer segments. A digital wholesale bank will be allowed to take deposits from and provide banking services to SMEs and non-retail customer segments. A digital bank offers the same type of banking services as a traditional bank, except that it operates entirely online without any single physical infrastructure, such as a bank branch. Digital banking involves high levels of process automation and web-based services to deliver banking products and provide transactions. It also relies on big data, analytics, and embracing all kinds of technology to improve the customer experience. So there are 4 types of digital banks: new banks, neobanks, beta banks, and non-banks. The move to offer digital banking licenses has sparked talks of collaboration among new entrants to the sector, non-banking players, and traditional lenders. Several companies have already signaled their interests, including listed firms such as Razer, Singtel, and Grab. One of the problems MAS is trying to solve by issuing up to 5 digital banking licenses is to increase the reach of their banking services in Southeast Asia. According to reports, more than 70% of the adults, which is about 296 million people in the region, have inadequate access to banking services. By issuing more digital banking licenses, mobile technology can provide people with immediate access to the benefits of financial inclusion. Another thing I think MAS is trying to solve is to help liberate the Singapore banking sector and take advantage of the ongoing digital revolution in finance. This is to ensure that they are not overtaken by the wave of changes taking over globally. The entry of new digital players will add diversity and spur greater innovation. This will help strengthen Singapore's local banks and the banking system in the digital economy of the future. With innovative business models and strong digital capabilities, these players cater to underserved segments of the market. They will provide impetus for existing banks to continue enhancing the quality of their digital offerings. For point number 3, what does a sustainable digital banking business model mean? It means that the bank is able to optimize its customer interaction, products, processes, and data around digital technologies. Successful digital banks are appealing on the front end, and they are digitally efficient on the back end. They use mobile and digital technologies to lower the cost to serve, and at the same time, these technologies are also used to bring their services to a higher level. If a company does not have a sustainable digital banking model, it means that they will not be able to provide the competition required to strengthen local banks and to enhance Singapore's position as a international financial center. If a digital bank does not possess a sustainable digital banking model, the digital bank will not last very long in the industry, and it will be a waste to provide such a company with a digital banking license. For point number 4, the advantages and disadvantages that digital banking presents to both the bank and the client. So first, the advantages. A digital bank should offer lower fees and higher interest rate. This is because they operate more nimbly using new technology, and the lack of infrastructure should allow them to pay higher interest rates on savings. For example, they could potentially offer deposits accounts without having a minimum deposit amount or fall below fees. This will be more attractive to people, attracting more consumers to bank with them, making it a win-win situation. Digital banks with access to more wide-ranging data sources can adopt different means of credit risk assessment also to lend to underserved segments such as the young and micro enterprises. Online banking allows you to access your account history and transactions from anywhere. This is the quickest way to see if a transaction has cleared your account. You may also find out the amount of a transaction after you have lost your receipt. making it very convenient to see how much you have spent and plan your budget. It also allows you to find out the unauthorized transactions more quickly, helping you resolve any issues right away. For the disadvantages, firstly, number one, the lack of a personal banker relationship. You may be able to handle your general banking needs by yourself. However, when problems arise, you often need to work your way through a phone tree and hold on for quite a long time before speaking to the customer service departments. And since they do not know you directly, but they might not know your banking needs or your banking history. It doesn't compare to the customer service that you will receive that at a physical bank location. For instance, if you are at a bank branch, you can meet up with the employees and receive information on important topics such as financing, credit card rates, and types of loans, all in addition to the standard banking procedures. Digital banking also has more limited services compared to retail banks. Some direct banks, some digital banks may not offer all the comprehensive financial services, such as insurance and brokerage accounts, that traditional banks offer. Traditional banks sometimes also offer special services to loyal customers, such as preferred rates and investment advice at no extra charge. Additionally, routine services such as bank signature guarantee are not available online. These services are required for many financial and legal transactions, making it very inconvenient for someone to do so. Thirdly, technology and service interruptions. Because digital banking requires internet service or computers, we are at the mercy of the system's stability and efficiency. Our ability to access accounts online will naturally be affected if our internet service is running slow or completely out for a period. Similarly, if the bank servers goes down and they are temporarily unavailable due to scheduled site maintenance, we will not be able to gain mobile access or online access to our banking information. And lastly, security risk. Online banking sites and mobile apps are designed to be very secure, and banks are continuously putting updated security protocols in place. However, no banking system is completely foolproof, and accounts can be hacked, resulting in identity theft via stolen login credentials. So we must be very careful to avoid using networks that are not secure, and we must ensure that we do change our passwords to protect our login information from time to time. For point number 5, we have to discuss how MAS issuance of digital banking licenses might influence the near and long-term futures of the financial industry in Singapore. Short-term wise, I believe that the issuance of the digital banking licenses will cause the competition of the financial service industry between traditional banks and digital banks to increase. Why? Because according to Arthur Yan, the Chief Deputy Executive of Hong Kong Monetary Authority, the licenses will aim to increase competition. This will help drive service innovation, new customer experiences, and financial inclusion through strategic partnerships and through industry convergence. So I believe that the scenario that they predict will happen in Singapore. Long-term wise, I believe that the financial industry in Singapore will improve and it will all be digital in the future. Why? Because it was found that 65% of the people are interested in opening a digital bank account. Around 70% of the younger customers are willing to use digital banks. This will likely motivate traditional banks to up their game to meet their customers' needs. However, the use of mobile banking apps have increased from 53% last year to 65% this year, while the satisfaction of the primary bank has decreased by a significant amount from the previous year. So what is value destructive competition? Value destructive competition, I think it is competition that it is so competitive, it starts to drive companies out of the industry or the market. This can happen when companies drive down the price of their products or services to the point where neither companies make a profit. I believe that it is very harmful if a bank were to gain market share through value destructive competition, because it means that some banks will be driven out of the market. In the end, there will only be one or two banks left, and in the end it will be only one bank left, and it will end up as a monopoly industry. There will be no competition, so this might cause the price of the products and services to be too high because there is no one to fight for their spot. Okay, thank you.